We can get it out there, and also link to put under the Twitter so that people can check it out. But I think we're live now. We are. What's going on, everybody? Welcome to Wolf. Happy Wednesday. It's good to see all of you. The week's flying by. Bitcoin pushing up a little bit. Let me see where it's at right now. Sitting around 115. Forgive me. I've got all these random altcoin charts and microcaps and all these random things from our previous space pulled up on my chart. Bitcoin is nowhere to be found, unfortunately.
Goddamn degenerate.
But anyways, fun night to be live in the market. We're joined here with Bits of Wealth, who you guys will recognize from a lot of the spaces, and co-hosts all the time, and generally just fun to talk just all markets, whether it's macro or super zoomed in onto like the 1 minute chart. Always fun conversations, and the flow, of course, from Ostium, who is the number one place to trade crypto, whether it's ETH or Sol or Bitcoin, whatever you're trying to get into, as well as the indices. You've also got Forex. You've got pretty much everything all under the sun, and all up to 100x leverage, in some cases 200, I think, for certain assets. And so a ton of stuff coming in the prediction markets, and Ostium's going to be ahead of the curve in all fronts on that side of things. So if you guys are looking for a platform that's pretty cool and innovative, as well as just like a place to trade all things, I highly recommend you guys check them out. So I'm going to pin it up here on, if you're watching on X and you're tuning in, let me comment it down here below the stream, and you guys can check out Ostium. If you're on YouTube, just go down below in the description, and you guys can check him out. We'll show the platform here up in a little bit during the stream, so you guys can get a feel for it. But want to get some just general thoughts from the guys on where we're kind of sitting for macro, if there's anything you're paying attention to that makes sense to bring up real quick. I know me and Bits, obviously, we kind of went over a little bit in market talk, so if you want, you don't have to go all over into the details if you don't feel like it. But Flo, it's the first time we've chatted today, even though we usually get together a few times a week. So definitely want to get some updated thoughts from you.
Yeah, I mean, the overall market is pretty interesting right now. I kind of was leaning into a pullback again, towards that like 111, 112K level on Bitcoin. We got that. Was looking, for another, for the pullback on SPX to reach around 6,200. We kind of bounced higher than I thought we would. We didn't quite hit 6,200, but bounced a little bit above that. At this point, like on ES, on SPX, we've kind of closed the gap there. So now is where it becomes the most interesting to see if we have continuation there. And I think that's going to ultimately lead, most of the coins as well. My opinion hasn't really changed. I think that at this point that it's really become just kind of like risk beta, particularly tech beta in many cases. It follows the NASDAQ pretty closely most of the time with every once in a while there will be divergences based off of, certain like macro events and things like that. But right now, it still remains pretty highly correlated to, again, like the S&P and even more so the NASDAQ and the tech basket. As far as kind of things more broadly go, one thing that's probably very supportive towards the price of risk assets right now is DXY. So, and just in general, looking at dollar pairs, they're taking a huge beating today. Could be a different number of reasons for that. There's been some trade deal tariff news. I think that we imposed a higher tariff rate on India. There's been some talk of sanctions, increased sanctions on Russia, for example. That's been affecting oil prices. They've been very volatile recently and haven't really found the direction because we haven't gotten really solid news on what's actually going to happen. So that's a kind of area of interest there as well. But today, something that everyone's talking about is just the long bond. So something really weird happened. No one's sure if what it was, if it was like a fat finger or something. But if you're looking like at the 20-year, 30-year bond, or anywhere across the long end of the curve, so at the 10-year to the 30-year, there's just this huge jump in rates, a dump in bonds of those maturities. Still kind of trying to parse out what actually caused it. But that's kind of like, again, another reason for, the dollar to kind of take a dip, and just the market to potentially have some more volatility there. So still kind of trying to figure out what's happening. But some interesting things going on the macro side of things, which again, I think is going to end up driving the price of Bitcoin and ETH and the majors. And so, you may see some action in kind of smaller alts, memes, things like that. It always happens when there's more of a lull in majors. But right now, yeah, I'm like kind of iffy on where majors are going to go from here.
Very nice. Solid breakdown there, Flo. Bits, over to you, man. Let me pull up your chart here as well. And by the way, I was just, for people who are wondering, was just kind of trolling there through Ostium a little bit, just so you guys can get a bit of a sneak peek. By the way, that is pinned down below the stream if you're on X, and right below on YouTube as well in the description if you guys want to check out Ostium. Highly recommend it. Bits, I pulled up your chart here as well. I believe this is just Trading View pulled up here. I see Bitcoin against Tether pulled up.
Yeah, that's the BTC chart. Yeah, for sure. Yeah, Ostium's such a fun platform too. I've been playing with it the last couple weeks or so, and really, if you're a crypto only guy, you know, you're a little limited on, you know, like different pairs and stuff like that. But if you mainly trade the majors, you got, you know, BTE, Sol. But I think the power of Ostium is the fact that it gives you exposure to these things outside of crypto that, you know, typically you need to go into like a traditional account or something like that. So if you're trying to, you know, if you're trying to leverage your crypto bags to maybe play gold or play, you know, S&P or something like that, you know, it's a really cool platform. So, and then it's built on Arbitrum. I'm a big ETH bull, I guess you could say, you know, in not so much because like the chart is always bullish to me or anything like that, but I think I think Ethereum's a strong ecosystem, even though a lot of people are calling for it to be, you know, quote unquote dead. It's not the case. There's too much liquidity on Ethereum. If you look at like stable coin liquidity, it's massive, deep liquidity on ETH. So, and then the L2s, it's just a matter of kind of picking which ones you like best. ARB has been one of my favorites. I like Base as well. But you know, usually when I'm doing like DeFi stuff, I am using Arbitrum. So yeah, it's pretty easy for me to go and give Ostium a quick little a look and stuff, just because I was already there. It wasn't hard. It didn't put me through any crazy hoops to get onboarded onto it. So yeah, it's a cool platform. As far as like what do we got on the screen here? The BTC chart. Yeah, as far as this is kind of what we were talking about earlier today, right? It's like this was that level that we bounced from, and I had it marked, and this is the one that I was talking to Steve about, right? It's like I had this level marked on the lower time frames, and the reason I was interested in it, right, and I was watching it, is essentially it was a pullback into like this W, and it's, you know, until you kind of get used to seeing these patterns, but it's essentially like a double bottom, but it was a W. The right side of it swept the low and then had a nice big reclaim up above it, but you basically got like a W here on the lower time frames. Wasn't in support, which was one of the factors that kept me from really going in on this, even though it kind of met a lot of the criteria, but it was kind of here in between range, and it wasn't down where if this pattern had happened down here, I would have been game. Like I would have been game. I picked up spot here, but on the back test, it was just like, nah, it's not in the right zone. There's a chance that this next leg could come down, and that's where I want to play, right? Didn't happen. It did catch the bounce here, which is cool. I mean, it's like, this is what I like about trading and doing analysis on these charts, is sometimes you might even play your own setup. Like I identified this. I was talking to some people about this. It's like, this looks like this is going to bounce here. And, you know, and we were talking about, yeah, but you know, lower looks better. But sometimes even when you don't take it, just knowing that, okay, I'm improving and I can trust my instincts a little bit better, because I know that even when I don't take the play, a lot of the times you're going to be right, or you called it correctly. So yeah, that's what this was. This was just a pull back into kind of this little range here. And sure enough, we moved up. But as you guys saw, like when we're looking at the higher time frames, you're still not clear. You're not ready for takeoff in a sense. Like I know, you know, Steve was calling for a move back up to all-time highs. I think it could be the case, but before you get there, you're going to need to see something probably like this, in my opinion. You're going to need to see something like that, and then you're going to make that swing for the highs.
You need to take a bite of liquidity first, and then you know.
Yeah, exactly. So it's gonna have to move in here. It's gonna have to flip this range, and I've got this like gray zone. This was basically the lows of this entire range, right? This is where if you're a range trader, you were buying anytime that it was here near the lows of that range, and you were selling up here near the highs. A lot of people do like grid bots. If you're setting up like a grid bot somewhere, you could have been trading basically this range, right? Selling at the highs, buying at the lows. But it's just coming back up. It's back up to that range. So it's in no way is this like back in a bullish scenario for me. It needs to flip this. It needs to get a big move up above it, come back down, flip it. I need to be able to right click on this thing, turn this into basically a support level. And then I can say, okay, I'm willing to play long from here for some potential continuation up. But we're not there yet. Right now, this thing could still reject from here. If you don't get something like this up out of that zone, we're still very much in a place where you could still get a move lower here. You could still get something, it fails, and then it just continues down, and you get something like that. And this is where I want to play anyways for longs, right? So let's see what happens here. The total charts are kind of showing the same thing. So you look at total, same thing. It was kind of up here, put in somewhat of a double top. You're just back testing the neckline of this entire thing, right? Like this is basically what you're doing right now is you're pushing back up into these lows right here that were support at one time. There's still a potential that could reject there. So it doesn't have to, but the potential exists. And so, like I think OTG was talking about, he doesn't like to risk money. He wants to see that confirmation, right? And it's the same thing, whether it's for shorts or for longs. If I was going to play this, like I want to see it get back above here and show some strength. And then I'm willing to get long again on a potential reclaim of that range for continuation higher. But right now, I don't see it right now. Favor's not on my side. This thing could just roll over. Right. So
yeah, definitely. Something always pay attention
Pretty
to.
much agree. I've mostly been trading ETH just because it's like the stronger asset these days. So it did have some kind of smaller support. I did kind of play it from where your kind of box is. I managed to kind of play the bottom of that kind of consolidation after the latest pullback. But yeah, once we hit 20 or 3,700, 3,750, that was my sell point. So I'm still kind of just very much so kind of in a neutral stance right now after this latest kind of pump back into liquidity.
Yeah.
And ETH is a strong coin. There's a lot of people sitting on ETH bags. But you can't deny the fact that, this has been, a big zone where there's been a lot of profit taking in the past. Right. So
literally adamantium resistance, the strongest known to man,
Yeah, exactly.
100%. There's something in there. I had picking up on a lot of these conversations here, taking level by level of just being a lot of the conversations of being okay, are we going to accept this zone that we've tested into, or are we going to just jump right back, back to where we were? And if we do, okay, now if we're into this next zone, what's the next top that I need to pay attention to? Is the new support that we're sitting at now? These conversations, I feel in these spaces and these streams and stuff, from a trading side of things, once you've been in crypto, and I could be wrong, but I do think a good portion of our audience, people who've been in crypto for a while, and this past year have just, along with us, the last year, just noticed how much you really need to understand, at least on a basic level, the foundations of trading, and just understanding a little bit how money moves. You just get left behind. I mean, it's just going to be so bad. I remember there was a period in the maybe a few months ago where we were just stagnant for a while. I felt like we were just saying the same thing, which was that. And it ended up just being true. I mean, it's just the market presents so many opportunities, but you have to be able to just look at the charts and not just have a full mind blank. So
that's probably the hardest part, actually, is and I wonder, Flo, if you have any data that you guys see, when we're heavily ranging, right? Let's say we've been range bound, and ETH is probably a good example. Do you see, is there a point where after a certain amount of time of just sideways action, do you see people take more risk because they're maybe getting bored and there's not enough volatility, so therefore they're taking on additional risk, or the frequency of trading maybe increases because they feel like they have to extract money out of a market, and when the market's just going sideways, maybe this starts to limit. I mean, this is not the best example because this has had plenty of volatility, but you go through periods where it's super tight. Maybe BTC is a better example. When it was here, where did you see people take on maybe more risk, or did they start trading more frequently from the back end? Like, do you guys see any of that data, or is there any like anything you can share from there?
It's mostly always at the extremes. So, when you're like, for example, on your chart, it's always, the biggest trades are put in. So, the largest shorts are put in those big green candles, the biggest longs are put in those biggest green candles, and the biggest shorts
are down here
on these biggest red candles, to be quite honest with you.
Yeah.
Just in general, the consensus is that, just the majority of traders are going to end up transferring their money to the market and the rest of us, right? So it's the extremes that you see is kind of what you'd expect, is people tend to layer into longs at the very top. You see the highest amount of trading activity. And then again, you see but also, that's also when you're seeing liquidations as well. So it's like you always are seeing the highest level activity at the extremes, because you're seeing people start to FOMO into kind of like either the bottom or the top. And you're also seeing the other side capitulate. So it's very interesting how everything like gets put together, like in trader behaviors, like make a market, because it's like, to some degree, humans are just, and the reason this works and TA works to a degree is that humans are somewhat predictable in the way they react to things. When you're at extreme bullishness, you have all the shorts capitulating, all the longs adding, and then at extreme bearishness, you have all the longs capitulating and all the shorts adding, when, it should be the opposite. So, we've seen like the last dip to 98.5K. I mean, we had some traders who, they thought that was the time that we were going to have like a bigger kind of maybe downturn, a bigger pullback,
I remember,
because of seasonality or whatever it might be. So we actually had, a couple big traders who they thought that was the top. And so they shorted heavily into that 98.5 area. And we kept going up, 110, 100, and we hit like 110, 111 again. And, they capitulated, got liquidated, unfortunately. But then also what happened, that was like also the local top, everybody, all longs were being added at that point. And then if it was like another 200 to 500 points on BTC, you know what I mean? If like it could have been held, then basically he might've still been able to salvage those shorts. So it's always just at the extremes. It's like right when it's like, okay, it's actually finally about to break, like the short is finally about to, maybe you might actually like eke this out and make money. Like that's when the capitulation happens, like almost every time. It's like, it's really interesting to see the charts like play out in like, just on the back end as well. And just like how things, people's psychology they react exactly how you think they would in some senses. Yeah.
What's funny is, and Kate has seen the chart. I don't think I've sent it to you, Flo, but I'll send it to you later. But like my indicator, my private indicator that I have, it fires on moves like this. And usually this is when my indicator fires. And it's
you almost
pretty
don't need the indicator anymore, Fitz, because you've got like a 6 cents for the indicator now. You could build like a derivative indicator off of this indicator that you just have like a 6 cents for.
It's actually funny because I wouldn't be surprised if we do get that big push through here, or if we get like just a liquidity trap that reverses. I would not be surprised if it fires somewhere over here, but somewhere in here. Yeah, that indicator always is triggered by big green candles. It's never triggered by price being in a value range, right? Which is so funny. I don't know if I told you about this, Fuller, if you heard about it, but I've got let's call it a social indicator that likes to give me a signal when price is extended to the upside. It's very very funny, very funny. But it's all part of that human behavior where it's like and it happens both ways. Like the best time for the Moon Boys to talk smack about the bears is up here. And the best time that the bears want to talk smack is down here, right? And it's almost should be the inverse. Like the Moon Boys should be talking smack down here, saying like, dude, we're about to go so much higher because we're back in a value area. And the bears should be like, dude, I'm about to short this thing up here, back all the way down. But you get the total opposite of it.
But the reality is they longed up here, and now they're trying to cope and salvage their positions, or they shorted it down here, and now they're trying to cope and salvage their positions at the top. So it's literally the exact like inverse of what it should be.
Good time. every time.
That's so funny.
Yeah, no, literally. Flo, I was going to ask if you have any sources / places you go to when you're trying to figure out news or announcements. Are you just like chronically on X? Like, where do you find places where there's reliable, good information to get a bit of an edge in this market? That's what it seems like you need to have. You need to have some kind of edge, even if you're good at trading. A lot of times, there's also other people who are good at trading, and so anything you can do to carve yourself out an edge is gonna definitely give you a chance to kind of make money in this market, because there are definitely opportunities. I know a lot of people who are making money. So
he goes to the wolf accounts, Kate. He goes to the wolf accounts. Tell him, Flo.
Of course. All the wolf accounts, wolf trading, wolf crypto.
Oh, yeah.
All of them. First things follow, put on noties.
Yes, please.
Please. I mean, realistically, kind of keep it basic. Like you said, I follow the normal kind of like Squawk accounts. And I think that's kind of like the main thing is if, people, some people might be used to following more normal kind of like news accounts. But the main thing is you want to be following or, get notifications for Squawk accounts. So those are kind of like where the news gets the news, right? Sometimes there's actually services that they started out as it's an audio or like an Audible service. So they would literally just have people who, as the news was hitting the wires, like they would have people shouting it out. That's why it's called like a Squawk box or a Squawk feed. And, from there, like the people in the newsrooms would take those squawks and translate that into the like breaking news. So essentially those are the news feeds you want to be connected to, is the squawks, because that's where the news gets the news. So the main one, or one of the main ones that everybody follows on X is Walter Bloomberg or Delta One. So they're kind of like a general all-purpose. They share news about everything. So, they're a good one to follow. There's DB or what is it? Tier 10K or what? Let me see. But another one that's like more crypto focused, crypto specific, although they do have like more general macro news as well. One that I use, but this is like you get it sooner, but it is like a paid service, a paid feed, is like Financial Juice. They also have like kind of like a few different services, but like that's primarily what I used to use them for, is just, again, like pure news feed, pure news squawks. Also data releases. So they'll get you the data releases for anybody else, whether it's, the CPI, PPI, just like rate changes, FOMC decisions, just like all like those squawk accounts will also get you the news again first, because when it really comes down to it, the accounts on Twitter, they're also pulling it from these sources, right? So that would be like just my advice if you're trying to like really pay attention and follow the news, is squawk accounts. And again, there's a bunch of different good ones on X that you can find. I won't endorse too many. Walter Bloomberg, again, is just like a really general kind of like one everyone uses. But yeah, so that's what I use for news. Other than that, just if you really want to keep on top of things, sometimes before they even are news, X, Twitter, follow again, won't make any endorsements, but just follow the accounts that Wolf promotes, the people on their spaces, speakers, panelists, and you'll be all right. If you really, that's another thing. If you actually go back, especially I'll say probably over the last like quarter, like 3-month period, like all the panelists on the Wolf spaces, like for directionally, just like, especially like I've really been on point. There's been a lot of consensus. There's been a lot of consensus, which sometimes is worrying. You know what I mean? Like sometimes you're like, everybody agrees. So it's like, but actually, if you go back the last few months, like everybody agreeing hasn't been a bad thing. Like the Wolf panelists, like if you were to just like follow what we've been saying on spaces for the last few months, you would have made money. Like it's actually kind of crazy. I've been pretty impressed with kind of the spaces recently. One of the reasons why I'm just like, kind of just listening a lot of the time too nowadays, because I'm like, man, like these guys are already like, dropping a lot of the points that I would normally be dropping 6 months ago. So it's like all the panelists, the game, like Wolf crypto game has been leveled up a lot recently in the past. So big ups to Cade.
Dude, thank you. Appreciate that. And I remember the early days and just running that space out. We weren't really exactly sure where we were going with it. Not nearly as technical, and I'm not sure the word. I don't know if the word professional is the word that comes to mind, but like just high level, I guess, like solid, just like solid.
Let's zoom in bits. Like Bitcoin, Ethereum, both pumping right now.
I just got an ETH alert. That's why I pulled it up. I hit my my alert I had here at the monthly. So yeah, it is moving. Here, let's start with BTC. Let's go into like a 15-minute here. It's about to also hit my alert. I like to set these alerts. Like this is one of those things that I'll do if I know that it's coming into a zone that I want to pay attention to, right, for a reaction. And in this case, like I'm not really taking a bias here. I'm okay with looking for short opportunities here, as well as waiting for it to kind of prove that it's going to get past this and give me a long opportunity. So I'll set an alert as it's coming into it, just so I don't forget to come back and take a look at it at some point, right? So had my alert here. I'm going to go ahead and move that up because now as it's coming into the zone, the next time I'm really interested is if it starts kind of breaking out of the zone. I'll want to be paying attention there. But yeah, we're getting some strength coming into BTC. I'm not seeing a whole lot of volume though. Okay, this one had some volume. These candles that I'm using, by the way, you guys can add them to your trading view chart. Just look for vector candles, and what it basically does is it's looking at volume. And if you get a move that's coming in on higher volume than the previous set of candles, it'll color it accordingly, right? So like a blue candle, I believe, has 150% more volume than like the previous, and every indicator is different. Some of them are looking at like the previous 10 or something. Some of them might only look at like the prior 6. But the blue candles are kind of like moderate volume. It's higher than normal volume, but the green ones are over 200%. So this candle that's colored green here, that actually means that it had over 200% more volume than the prior 10 or whatever it's set at, right? So it's a significant candle. And what it does is it's just an easy way for me to know, without having to pull up my volume, my buy sell volume down here, that this was a high volume push. Right. And these kind of gray ones are just telling me this is just regular volume, like nothing outstanding or out of the ordinary is happening here. This red one, for example, is the exact same. The red is equivalent of the green. This is over 200%. And then the little violet colored ones, purple, whatever color you want to call that, that's over 100%. That's like a blue, it's equivalent of a blue. So really, it's like when I'm coming into key zones, I'm looking for these vector candles, as well as, double checking with the volume just to make sure it's not a false signal. And then looking at my visible range on the side to say, okay, is it in an interesting like volume pocket or something, some reason why I should be paying attention here, along with like levels, like monthly or weekly opens, anything significant like that. But yeah, right now, really no trade, no anything to do for me at this point. I'm just kind of observing. I will watch for reaction here.
Like we're right at this level right now on BTC, on ETH, like a bunch of assets for like, and even SPX, we're like right at the level where decisions need to be made. Like, are we going to go higher or are we going to reject it?
Yes. Yep. ETH already actually tagged it. So ETH tagged that monthly open here, which, it's only the open from a few days ago. So it's not like a super key level, but it was interesting that, we opened the month, went down, and we're back at that monthly open basically. So it's tagging it. It's still in this kind of like little volume zone that I had marked here. If we zoom out on Ethereum, you still could go up a little bit more. Like the bottom of this prior little range here is slightly up. You can see here we're still in this volume gap. Price could still come up a little bit more here, but I am watching here just because of that monthly level, and because this is like the deepest part of that gap here. If you stretch that over, you can kind of see how that matches with that. It's very interesting. The other day I was like, I was pulling this off to the side, and the visible range is cool because it tells you volume based on what you have on the screen. So you'll see it adjust here in a second. It'll okay, there we go. So because there's not a lot of price action over here to the left, there's not a lot of volume data, right? Like the volume, the high volume stuff is here, which is where the price action is. But it's, as you're watching it, like as you're getting new candles on the screen, you'll see that the visible range on the volume starts to pivot a little bit. Watch, you'll see it here adjust in a minute. Okay, no big adjustments yet. Hold on, let's add a little bit more data. All right, now it'll adjust and it'll put some volume up higher up. There we go. See how it populated that volume up here where we're now printing some new candles. So what you're looking for is, like, for example, as price is giving you new information, you're looking for where these gaps exist, because these are kind of like imbalances in the market, and it'll go down and it'll fill that most of the time. So there you filled that. You see it kind of came down right into that gap, and then it's pushing up from it, right? The next gap we had at that time was down here, right? So you could see that when this was happening live, you had this big pocket down here in the volume, right? So we're going over. What happens? Price comes down to basically fill that gap. Notice you could have got picked up right there, right? You could have had some limit orders here, and it would have tagged you in for that move up. So it basically came down, moved into the gap, and it's moving up now. And you can see like the volume profile, it's something that's dynamic. It's as you're getting more information on screen, it's giving you new data. I don't know how to trade without this thing. Like, yes, I can trade without it. I don't like to trade without it. It just gives me a lot of data on the market.
With that volume profile, like you would have been like, okay, I'm going to layer into some shorts, maybe around 3,700, 3,740.
Mm-hmm.
And like, you would have caught this pullback like pretty cleanly, like through the volume profile for sure.
Yeah, even when it was coming up here, right? Like you were looking at these levels that you're outlining, and you can see that volume is like just dropping off dramatically. You have another thing that we look at too is like on these big red vectors, if there's a little bit of that vector that's still technically like unclaimed, like price hasn't come up to fill it, it does tend to move back up there, and it'll tag those levels. Notice this one, right? If we were to drag that over, what did it do? It went up there, tagged it, went above it on this move quite a bit. But yeah, you can kind of like if you like to range trade, you can find, okay, where's price likely to go into? Like here, that gap is still big. You still have a big drop off in volume here, and now you have like a little valley here as well. Is price going to go in there? Look at that candle. That candle tagged right into there. You could have got a quick little long up if you were playing scalps. But yeah, price will eventually move into these gaps. Okay, now you're filling this gap that hadn't previously been filled, right? Notice how it's going to go away again. Okay, went away. There's a gap, right? Price comes down, trades into that gap. What happens is price trades into that gap. You're going to see it fill. We'll give it a little bit. Boom, right? Filled it. Now you've got a gap to the upside up here currently. So yeah, price moves up into that, fills that, balances the market, Yeah, just a bunch of there's a bunch of techniques, man. But I like using the volume profile on the side. A lot of people also do the fixed range. You can do like a fixed range and just say, okay, I want to know like in this little chop area here, where's my point of control for like this little range, and it's down here on this, right? So
yeah, I mean, you can still get like just a little bit push higher, like test into that, like fill this little volume gap here, and then test lower. It's still kind of like, we'll see what happens.
Yeah, this stuff's looking good though. I'm liking the price action. Plenty of opportunity to play. Like if you're on low time frame, if you're trading, like 5 minutes and stuff, dude, you're getting a ton of opportunity, a ton of action here.
Yeah,
like this thing could just range here for the next day or two.
Yeah, definitely. And something that OTG said earlier on the space was, he was like, he's like, there's always a setup to be found. He's like, if you really want to find it, you just have to zoom in or zoom out or whatever it is. There's always, he said, you always could take a trade. Just to mention, that's the kind of trade you take. Like if you're not a swing trader because you suck historically at swing trading, but you're like, oh, there's a swing trade opportunity. It's like, is that an opportunity or is that a side quest ending in disaster? And it's not exactly something like, maybe that's, something that you can do, but maybe you shouldn't do type of thing.
Well, like if you're swing trading, like if you're trying to do what Steve talks about.
Yeah.
And I used to swing trade a lot more. I've been scalping and doing lower time frame trades a lot more this year because of the way the price action has been. But previously, and honestly, like my preferred way to trade is to wait for the high time frame zones. So what Steve or any of these swing traders would basically do is they'd say, okay, if resistance is up here and support is down here, they wait until price is in one of those zones, and they basically won't do this. I think we did it on a prior stream one time, Cade, right? Where we said, like, if you're in between zones, I had a mentor who told me at one point, he's like, yeah, I want you to take a box and I want you to just put it in between the zones. And I basically want you to just color that box black.
I remember.
And then just darken it. Cause you've got no business trading in there. Like just literally bring that to the front, right? And then you're not interested. Like you're going to wait until price starts peeking out over here or starts peeking out over here. While it's inside this box, you've got no business trading. and it, dude, like for trading high time frame, that's the way to do it. That's the way to do it. You go and you enjoy your life. You do other things while it's in here. It comes up outside, of that black box into the ranges where you're interested, and then it's like, okay, it's time to pay attention for a day or two and figure out what's happening.
Yeah, that makes sense. Yeah, I guess for longer term, you probably keep the stop losses relatively flexible too as well, right? If you're playing a holy instinct for 6 months, you need to have a little bit of flexibility, I imagine. Especially if it gets close to liquidation. Like, are you someone who typically will add to that position if you start getting close, or are you like, okay, maybe I got to rethink this?
Yeah, I don't think I ever really put myself in a position to get liquidated fully. I'll take stops. Like I'll gladly give some back to the market if I'm wrong in terms of stop losses. But getting liquidated on a position is very, very rare for me. The only time I would really get liquidated is if I'm playing like meme coins or something, and I'm willing to write it to zero, and it's a small.
That's why I'm asking. It's only a matter of time.
Like if I'm doing the casino equivalent of slot machines, then maybe I'm willing. I'm playing $10 at a time.
It's funny, the Bitcoiners don't like it when we meme coin trade, but they don't mind playing some blackjack and getting up to some Las Vegas shenanigans. But they get mad at me for trading my bar coin. I'm like, dude, the same thing. You're throwing money. At least I can be on spaces all day long and get a bit of an edge.
Just, the way you think about it is probably that money was never going into Bitcoin, whereas any money could have went into Bitcoin, right?
Yeah. It is interesting though. You know what it reminds me of? There was a meme. I remember when Pokemon Go came out, right? My kids had us driving them all over the freaking place and walking everywhere to play Pokemon Go. And I remember that some of my friends that are my age or a little bit younger, they were in their 20s or 30s at the time or whatever. And they were big fans of Pokemon and anime and all that. And just they grew up in that, right? And you had grown men.
I grew up in that, bro. What are you insinuating?
Yeah, I didn't grow up like heavy in Pokemon, I guess, dude. I grew up in like Gundam and DBZ and stuff like that, but and a bunch of other stuff. But yeah, look, I've no judgment for me. Like, dude, I get it, man. I'm all about that. But it was funny because you'd see like, and this was back when Facebook was, a big thing still, and most of the people my age were on Facebook primarily, and you'd have all like the people that weren't into it or didn't understand video games or collectibles, and they'd say, dude, it's so funny, all these like grown men out there, like, walking around collecting Pokemon. And there was a meme that started circulating that said like you've got the fantasy football guys laughing at the Pokemon Go guys. Like, what are you laughing at, dude? You're playing pretend football. Like, you've got no place to be laughing. You play fantasy sports. What's the difference, right? It's like, oh man. And I just thought it was so funny. It kind of applies here,
Represent. What
do you got there, Flo? What is that,
bro? Pokemon Go.
Oh wow!
Let's fucking go.
Dang, I didn't realize we were in the presence of royalty here, Vince.
I was actually so like elite at that shit, and then I didn't I switched phones without like linking it to my Google account or something. And of course, I took I lost everything, so I took the only rational way forward. I quit forever, rage quit forever, and never touch it again.
That's the way.
Rage.
Only way you can do it. I mean, really,
that's the way.
At the point.
Dude, that is wow. That's brutal though. That is brutal,
dude. And I think we've even talked about this, and I know this isn't like it's not like a gaming stream or anything like that, but I still feel like if anyone has a shot at truly bringing like Web3 gaming and tokenization of collectibles or assets to like a truly mainstream position in the market, it needs to be like a Pokemon. It needs to be something like that,
You think so? Like I
think so.
It would probably be, if it ever comes out, the GTA 6.
Because the thing is about it caught on to so many different things that many games later figured out was essential. And the main thing was collectability. Having these other like little things within the game, gaming items that you could collect. And this was obviously pre Web3. This was like a lot of the internet still at this point. So it's just like they understood that in order to create virality and to create this, you need like having all these little characters, the people that kids could like collect, identify with was super important. So I mean, look at what's happened since then. Everything from NFTs to just just any kind of IP you can think of at this point. They always have the like little collectible character like sidekick, you know what I'm saying? Like they have like the little animal, the little creature, like the little thing that the kids are supposed to love and buy all the toys of, right? So it's like that's like a huge thing. And I feel like Pudgy Penguins,
it could be Pudgy Penguins.
They're like, that's why they have such like a strong thing going, because they've caught on to that like if you can find character, like a little cute character that kids will get attached to and love, they will be your customers 30 years from now, for one. And today their parents will be your customers right now, you know.
Oh, I was gonna say, bitch. I was like, what is this chart?
Oh yeah,
Pengu. I thought you had like a meme chart pulled up.
Pengu is strong, dude.
Pengu.
Yeah, Pengu's up here, man. It's holding up.
How's the igloo holding up, Bits?
How's which one?
How's the igloo holding up?
Yeah, I mean, dude, this one at this point, I mean, it's hard to. Number one, you don't have a lot of data on it, right? But it's back up at the highs. It's looking strong. You do have like this massive gap here. It's a big imbalance. Like, could this come down here and fill that? You know, yeah, sure. I think it could. The chances of this thing making a lower low, I think, are pretty slim right now. Yeah, dude, this thing's just looking strong. It's still just climbing on up there, but it is starting to approach like some of these levels where we got to just kind of pay attention. So see that this was a January high, and it basically just came up and tapped that. So you definitely have, you know,
complacency shoulder forming there, like right now. You know what I mean? It could basically go and want to create like a little like cup and handle type little thing on a macro level. You know, that little volume gap, like, you know, fill in the belly, like have like a little bit of a range into that, like kind of the belly of the cup. And but that would also, I would assume that the rest of the market would have to take a downturn too.
Yes,
for that to happen. So
yeah, this structure looks pretty good though. I mean, it does look like it wants to trend up from here, but yeah, you've got this big gap, and then the volume starts to come on right around here. So we'll see.
Yeah, Penguin's definitely one to watch.
This is a conviction. This is a conviction play though, right? I think most people should probably just be, if you believe in it, you should be buying spot, not really trying to like leverage trade it.
Yeah, I mean, it's still pretty small. Like it might be is it in the billions yet? I think it's still a pretty small market cap to be like last I checked. But I mean, I checked.
No, market cap for Pengu I think is pretty big, right?
Is it?
It's in the billions.
Wow, actually, wow.
It was like I remember because they launched and I was like, what the hell? Like this thing is like, what? I was like, well, there's no opportunity here. I'm not going to make any gains. Like this thing is going to move like a.
Yeah, I mean, that makes sense because it's
like
returned to like launch. It's returned to like the launch kind of like valuation now. So
yeah, like I think some people made probably a couple 2Xs.
Like 2 billion, like 2 billion actually. That's pretty crazy.
Yeah, I think you're right though, Bits. I get the sense that this is going to be a conviction play. People really, really like Luke Netz. Luke Netz, he's the founder. He basically bought it, for people who don't know, just for some context on the company. Pudgy Penguins is the company behind Pengu, and they were an NFT company, and the guy who bought it, Luca, he's like a serial entrepreneur. He took the company, it was like dead on arrival. They had raised so much money, they had no idea what they were going to do. It wasn't run very well, and he said, okay, I'll buy the thing for a couple $1 million. I'm going to take this IP, and I'm going to run it up, and I'm going to figure out a way to make this business profitable, because it's not. And everyone laughed at him, and then long story short, he like was the unicorn, and really took off. It's one of the craziest stories of all time for crypto. Because
Cole, it's the guy who owned or like was
Cole Ethereum or something like that, right?
They both were in like drop shipping, like e-commerce, like before this, which I find is really interesting.
I know.
So yeah, they both came from similar backgrounds, but obviously Luca's the one who took it new heights. Luca's like a freaking boss at this point. Like he actually took it and became successful. I don't know what Cole's doing anymore, but obviously his he fumbled the bag massively.
Wasn't like Luke Belmar also somehow tied into all this or something at some point?
Who was it? Who?
I have heard a couple of weird stories about people saying the Pengu token was a little sus on how things happened and rolled out. I've heard some weird stories. I don't even remember the details. I just know that when I found out, I was like, oh.
Token launches are rarely not sus.
I know.
I would say that. Just in general, like you have to, because it's not a traditional market. You're not like going through the NASDAQ, the New York Stock Exchange. There's not like, tons of just, it's essentially how you think of in crypto, tons of LPs, market makers looking to provide liquidity for your asset. So a lot of times you have to dance with the devil a little bit, sign your soul away a little bit in order to get your token actually listed and liquidity provided for it, because you're kind of it's not a centralized liquidity kind of situation like it is in the traditional market. So you gotta really work for your liquidity. You gotta really in many cases, like I said, unfortunately give up part of your soul to Binance or part of your soul to on any of these other exchanges, these centralized exchanges. So
I will say that's one thing that I've actually enjoyed from the meme trend is there's been kind of that rebellious side to it, which has been like, hey, you know what, we're going to run this up, and we don't need VCs, we don't need centralized exchange listings, we don't need any of that traditional stuff, we don't need paid marketing, we don't need, like, some of these projects are like, we're not going to pay KOLs, like we're running this up entirely organically, community driven, and I think that that's interesting. But yeah, look, I think in crypto there's always an insider. The insider is either, like, obviously the team is technically on the inside, right? They're technically insiders at all times, the team and the extension of that team. But I think a lot of people, when you think of insiders, you're thinking of like VCs and these capitalists that come in and help fund some of that stuff. But the truth is, if you don't have those guys in, your insiders are your early adopters, and it's like the friends of the team and everyone who got in right away, right? Or who had a heads up about it. And so there's always going to be an insider. There's always going to be someone that got in early, has massive bags, and that you're always kind of like a little bit worried that they're going to dump on you all of a sudden, like at some point, if you didn't get in at a good value, right? If you just kind of like top blasted or whatever. So it just is what it is. So there's always going to be a little bit of like sus in crypto, I think, unless this thing just goes full institutional style play, like where everything is registered and declared, and and even then, I mean, look at the traditional markets.
I mean, Figma, for example, there's a lot of people kind of talking on X or Twitter, whatever, about how they left so much money on the table with this, the valuation, and then it listed 3x above the IPO price. But it's like, in reality, what kind of the grifty part, or the part that is unsaid there, is they did that on purpose to create FOMO. They're offering like a certain percentage, a lower percentage of the supply at this like $30 or whatever it was, knowing that the demand for it is high. It's going to go up to 90, and they're going to create FOMO. It's going to become a meme, so that later on they can sell the rest of their not the rest, like all of it, but so that they can sell the other portion that they plan to sell up at 100. You know what I'm saying? So it's like they actually purposely price it lower because they want to create a meme, want to create, it's listing at 5x IPO price. They want people to FOMO so that they can sell the rest of what they plan to sell at the higher price that they might not have gotten if they just originally went and listed at 100. And from there, it just might have went down, right? Instead, it makes more sense to get all the new buyers into it at lower prices so that they can sell the higher portion of what they want to sell later at a much higher valuation. So it's like there's all kinds of these psychological games that that experienced players and investment banks play on retail, play on the market as well.
Yeah, it's been so funny, the professionalism of the industry as well. And then we see how it works, and we're like, huh? Like, what? You did what? Like, or like, you sued this person, or you made this person stop talking, or a bunch of weird stuff. I'm interested to see, especially towards the end of this year. We talk about it all the time in the Spaces bits, but this whole back and forth of the 4-year cycle, I've seen from a lot of the macro conversation, they're basically all on board with the 4-year cycle is likely over. And then on the trading side, totally different conversation, entirely different. Because if you guys have levels you've been drawing out,
well,
like
they
trend line that's held for 7 years, like this, these kind of things. So.
They think it's over, but we're going super cycle is what you're saying, basically, right? Like on the macro side. Yeah.
A lot of them.
Who, or just like on what side?
Oh, probably the Bitcoin maxis, I would say, mostly.
Yeah, it depends who you talk to, but a lot of them generally think it's either going to be super cycle. A lot of them just think it's going to track with the stock market, though. They just think that it's been too institutionally adopted. It'll likely just track up.
It's financialized. Like that's the main thing, is it's actually more than gold. The reason that gold has these periods of or longer periods of decorrelation and sometimes even negative beta is because gold, when you really think about it, is not that integrated into the traditional financial system. Like you can't go into the bank right now, or most people anyways can't go into the bank with a bar of gold and get a loan off of it. Like it's not, there's paper gold, for institutions, it is somewhat integrated, but at the same time, the speed and the level that Bitcoin has become integrated into the traditional financial system as collateral, for loan, just in everything else is crazy. Like, so at this point, I actually think that both, gold, unfortunately, like maybe for, the really doomer, kind of people, is gold is going to continue to become more financialized, more integrated into traditional financial system, more collateralized. So is Bitcoin. I unfortunately think that, especially as unfortunately the markets become more concentrated, there's less actual productive companies up there actually to suck up value. It all kind of like goes towards specific, the Mag 7, for example. I think that more value is going to start to go into these like more financialized products. So gold is going to become more tied to the stock market, unfortunately, returns. I think crypto, just, Ethereum, Bitcoin are going to become more tied to stock market returns. The only way you escape correlation really is by escaping integration. So it's like once you've kind of integrated into the traditional financial system, people are hedging, like, it's entered into the entire hedging complex of like what people are doing and managing positions. I feel like it's very, very hard to maintain, or to just be decorrelated for long periods of time when it's like you're kind of integrated into the whole like hedging complex, whole collateral, you're used as it's used as collateral in all types of loans. And it's just, it's at that point, it's hard for it not to ebb and flow with like the rest of other just kind of risk assets of its nature. So
I pulled up the BTC over gold chart, by the way, since maybe it's something we can look at here. I'm gonna put that thread in the comments of the stream so people can look at it if they haven't. Give me one sec here. Where are we streaming? All right, cool. I'm gonna drop it on the ones that you shared, Cade, and I'm also gonna put it on the Wolf one. Give me one sec here, guys. Paste. Bam. Cool. Here, I'll drop it in the chat as well if you guys want to look at it. But yeah, this is that chart I've been watching, and I'll kind of talk through it, but you guys can look at the previous posts. Yeah. When this was coming up and it was kind of just starting to push up against this midline of the channel, right? It's kind of where I started to pay attention, especially after it gave this big wick and then closed this candle. So I was watching this here. I mean, clearly it was having a hard time getting above the midline of this channel. And what I was watching once this candle started coming down is I wanted to see if it was going to break the lows that were established on these prior two candles right here, right? So it built a nice little floor. And if it closed below that, then the risk is that it could come back up and essentially flip this structure here, right? Here, let me remove some stuff just to kind of clear it up and make it a little easier to see maybe. But you can see there's a very defined floor here, right? And so the risk was that it could come and essentially flip that back as resistance and essentially do that, right? Shift this structure here. And that's still what I'm watching right now. If that happens, then I'm going to be paying attention to roughly this level here. This is a fib level on this channel, which is going to start bringing us close to these lows here. You'll notice there's also an interesting little gap here on the profile, as well as here. So it could be levels that as price is coming down, maybe it bounces there, maybe it goes a little deeper. We won't know until it gets there, but I'll be paying attention basically at that point to see if something like this is potentially playing out. And if that's the case, can we get a bounce around this fib level here, or is it going to go and test the bottom of the channel? Which I wouldn't be surprised, because the bottom of this channel is actually here, right at or right below where volume peaked here, and you have a really steep drop off here
I think
off
I
of
would
that.
take a risk off move, because I think that, gold, my argument was that it would become more financialized as well, especially with tokenization and things like that. But I think that in order to get that kind of like a gold move, like a positive move against gold again, it would have to be some kind of risk off, like flight safe haven, flight safety type of bid.
Yeah, if this comes up, and it does, maybe not this weekly candle, but maybe the next one. If any of these next couple weekly candles come up and they close here and reject from that and then start opening back down, we're very much going into a risk off environment for probably a few weeks at least. Now, if this reclaims this and reclaims this and starts trying to get back up here again, then yeah, it's game on. There's strength in the market, and you'd probably have a move back up here and probably sweep and take out all that. So, but yeah, right now we're still, I think we're still in a position where you got to be a little bit cautious, because this move here, if this rejection plays out and we get this move down, it's gonna be brutal. Like people are gonna feel it.
Yeah, for sure. I think that like it's actually, it's a good like indicator within like a constrained like time period. Like I wouldn't necessarily look at it like over like a longer period of time, but like right now, especially like in this like secular period of the market, like it's like it very obviously, you can track like when is gold going to outperform other risk or other kind of like more risk on assets, commodities. Yeah, when there's a flight to safety bid, when there's the disruptions like in overseas, like in the Middle East, like and things like that. But other than that, like there's no reason over the next like few years, if we're in a risk on environment, that BTC should not perform gold. It's they have this.
Well, here's the interesting part, right? If you zoom this out, I mean, you tell me what you think, but this is the BTC gold chart, and this is 2021 highs, BTC against gold.
Wow.
We're not, we're not really much above that, but we're not above it at all, period, currently. And if we get a rejection here, was this just a deviation on BTC against gold that, was 2 months or so deviation above these prior highs? And are we going lower? Is this something like that?
Yeah, I would think it would have to be a bear market to get something that crazy. Like
well, against gold it would be, right? I mean, I don't know against dollar denomination, but against gold it certainly would be. And the reason why I find this one so interesting, Flo, is if you overlay in here, we could do it real quick. Let's do a new price scale here. So this is I just threw on do I have this in logarithmic? Yeah, so let me throw this one in log as well. Give me a sec here. Let me stretch this.
Yeah, I'm definitely a log chart enjoyer.
Oh golly, where did I throw it? I lost it. Hold on. Pull it back down. All right, let me stretch that out a little bit. Cool. So what you'll see is like they were very well correlated until roughly did I throw BTC USD? Yeah. Okay. So like obviously after we printed a ton of money, these started to kind of diverge a little bit. And what's interesting is like BTC against USD, it started putting in, and even though they're still tracking very closely, like you can still see they're tracking very closely, but notice that BTC against USD has continued higher, but against gold, it's actually not, right? If you look at it against gold, and here I'll zoom in a little bit more just so we can see it a little better, but there was a divergence. And interestingly enough, even against like some of the things we saw, for example, where BTC in dollars broke its all-time high here, against gold it hadn't. Against gold it was still below the 2021 highs, even though against dollars it had broke the 2021 highs, right? So we had like this, when we're talking about cycles, you had this new data point where you had a new all-time high prior to a halving. Well, the BTC gold chart didn't do that. It only did it in US dollars, right? And so the question, like it kind of begs the question, if they were basically so closely correlated, like almost identical all the way up until this point, they started to kind of diverge a little bit here.
Where's the biggest, like, where would you say they started to diverge?
Mainly here, like this is probably the biggest one where after it put in this high here, USD's continued up higher. So you're basically getting a move higher on USD, but you're technically putting in a lower high against gold, right? So
Is it like around March or something like that?
you've got that. Yeah. So this was after basically this year. This year they've been divergent this entire year. This was December, January up here.
I think
So,
it's interesting because gold has been getting some idiosyncratic like bid just ever since like
there, that should make it a little easier to see.
A lot of the most recent, especially Middle Eastern kind of like conflicts. I'd be very interesting if some of that like gold strength comes like along with like a kind of like risk off safe haven bid, like Middle Eastern conflicts and things like that.
Right.
When there was those big divergences, I'll probably look into that more after the stream.
Yeah, and it's interesting because you really don't have them before that. Like I'll go back and I'll check again, but I don't see anywhere in the the previous years. And I got involved in BTC back in 17. So before that, maybe it was different. But since I've been kind of watching it, I went back to roughly 17, 18 bull market. There hasn't really been a divergence like this where the dollar denomination has continued higher, but against gold, I mean, it's technically against gold, it's below 2021. It never really broke out against the 2021 high. Against gold, you essentially you're still below it, right?
Yeah, I think it somewhat like in my head makes sense why it would be that way. But
yeah, so it's a weakening dollar. It's telling you the dollar is weakening, but gold is remaining strong, right? Gold is holding up well.
Yeah, I mean that's like one reading, but for sure, I'm like more so, obviously.
Where are you going with it? I guess, yeah, just spit it out, man. Like, what are you thinking?
Direction of flows, right? Like at the same time, like the dollar, we printed a bunch of money. At that point, but if the biggest divergences, right, are starting after that, like period, right? So it's like the biggest divergences are happening now, like during a period of like more so like macro uncertainty. Was if you're saying it's like when we're printing the most money, when the most money was printed, it's like it should have begun sooner, right?
Yeah, the only thing I can think of is if we're just now feeling the effects of it. But yeah, I mean, I guess we started printing heavily going up into this, right? Like the money printing happened back here. All of this looks fine. There's nothing that looks strange about it.
Obviously, I think they both track debasement. Essentially,
yes,
they both track debasement. So it's like why is suddenly gold track or taking up more of the relative flows than it was beforehand, I guess is my question, right? I think that's the interesting question is they're both tracking debasement. So why like suddenly did gold get a little bit more like interesting relatively?
I would chalk that up to, I think this is telling me that the market still feels that Bitcoin is more speculative than gold is potentially what that's telling me. So like one way that I would interpret this is the market sees Bitcoin as safer than dollars, as like a hedge against dollars. But if you're asking the same market participants if they feel that Bitcoin is more or less speculative than gold, this to me is technically the way I'm choosing to interpret that, I guess you could say, or the way I'm interpreting is they're saying, no, gold is a safer place to park money than BTC. BTC is more speculative. Why? Because BTC is technically weakening against gold here, but it's strengthening against the dollar. They're both strengthening against the dollar. But if you compare the two, gold is outperforming BTC currently. And look, I mean, you could argue that this divergence technically has played out in that, it was from December, January through May of this year, and then they're currently aligned. They're convergent, right? They're both putting in higher highs. Currently, they're both putting in higher highs. Like right now they're aligned, but the greater trend for this year, if you're talking about,
right.
January forward, they're not aligned. Yeah.
Yeah, it's really, really interesting on chart. I'll probably start looking at it more. And I think that you're right. It's because gold is looked at as a safer asset, and because we're in more turbulent, like people are looking towards safe havens because they're more unsure about the path forward. Like gold,
that's how I feel.
Safer asset. Yeah, I agree.
Yeah. Yeah, that's how. And again, like it could just be that's the way I'm choosing to read into this, but with the understanding that I have of the market, like this is what makes sense to me. And if it's something else, then I'm missing context, I'm missing understanding, I'm missing knowledge or information.
If it works though, it's just like those M2
Yeah.
charts. I don't even
Yeah.
personally believe like in the M2 charts, but I'm like, you know what? As long as the market tracks it, as long as the rest of the market believes in it enough for it to track it, I'm not going to go against it. Like if the M2 chart has been like whatever it is, like forward 8 months or whatever people are doing, or 90 days, if that's working, like if that is on point and that's been working for the last year in order to kind of like predict prices, I'm not gonna fade that.
Right.
I'm gonna keep on following it until it breaks. So I feel like when it comes to trends, when it comes to these certain things, like it's sometimes like I don't want to even get caught up too much in trying to understand the causation. I'm just like, okay, it works. Let's ride the trend, right?
Yeah. That's like that. Okay, this is exactly like that Jim Rohn quote, right? Like some people, oh gosh, let me go find the quote because it's a good quote, but it's like, what does it say? Like some people want to study the roots and other people want to pick the fruit or something. Like it's basically saying that, right? And I think that's what you're basically saying there, Flo, right? Is like, we can sit here and we can try and figure out why this is happening and all that, or we can just say, okay, is there anything actionable I could do here? Here's the quote. So some people are always studying the roots while others are picking the fruit. Just depends on what end of it you want to join in on, right? So it's like, what do you want to be, the scientist figuring out why all this stuff is moving the way it works? Like, does that give you fulfillment? And if that's the case, cool. Or you just want to say, okay, how do I make money with this thing? And that's it. Like, I don't need to know what happens when I flip the switch. I just know that if I flip it, the light turns on, right?
It's like the analyst, you can be both. Obviously everyone, you can all be both, but it's like almost like the analyst versus trader kind of like type of thing.
Yeah. 100%.
That's exactly it.
But yeah, dude, I'm excited for you to like maybe put this on your list of charts to look at a little bit more frequently, and then just I
want to list a spread. I want to get Ostium. I want to get Ostium to list BTC again, BTC Gold, like to list BTC and gold.
Oh, dude,
wow.
Trade it. I think that would be insane. I think that would be like, again, I think it's actually like, after you've explained it to me a little bit more after looking at it, I think it's like actually such a great kind of indicator, such a thing to trade. Our thing, like we're trying to allow people to trade macro. So it's like just the things we're talking, the divergence between, obviously they both track debasement, but now there's a divergence between them a little bit, more likely due to macro. I think, I think it just fits narrative wise. It fits in many different ways. And I think I think that's something that we'll probably be looking into here.
Yeah, and dude, this thing has just been, here, where I don't even know where that path that I had on here went. There we go. Okay. Yeah, this thing has just been so accurate though in because this is literally what gave me confidence when it was back at these levels and it was starting to turn around back in April. And I was like, yeah, okay, BTC, because I was watching BTC just melt against gold. And then it started bottoming out. And I was like, all right, this is looking like strength. And it's like, yep, I mean, this just makes sense. Against, dollar denomination, this was BTC kind of testing the top of that prior range, 72 to 75K, right? And then here it was starting to turn around finally. And I was like, all right, this thing is getting close. And I had this channel drawn up already because the way I draw these channels is I'm always grabbing the most recent swing. So back then, the most recent macro swing was that. I connect it to the one before that, and then I anchor a swing that's between them, right? So like on two peaks, it would look like this. When I had new information here, then I was grabbing this one, anchoring here, and then grabbing that. So that's how I form my channels, and they're dynamic. You're constantly adjusting the channel with new information, but I had this level here already that it was like, okay, based on this channel that I'm grabbing from these 3 points, this is where I need to be expecting a reversal. And then you just were looking on the US dollar chart as well. And it was like, okay, it's getting close to where I said I wanted to buy. And it kind of gave me that level. And then sure enough, on the way up, it's coming up towards the midline of the channel. These are points where I wanted to take profits or take a little risk off the table, right? And it's continues to play out. This channel continues to play out. So I'm going to keep playing this like method with BTC Gold until it stops working, basically. But as long as it's working, to me, it's like a very good read on, risk off for crypto or BTC specifically.
Yeah, definitely. Like it's a really good indicator, honestly, at this point. Like I said, I'm definitely be incorporating into my like analysis. I know you share it like pretty often, but you know, obviously we're all caught up in like our own data streams. You try
Dude, yeah, exactly. We've all got our own stuff. Yeah. Yeah,
It's
a
like,
lot of the regulars are sharing stuff too, and I catch it occasionally, but it's a lot, dude. It's a lot. Sometimes you can't give it attention sometimes.
yeah, and at a certain point, you get to the point where it's like instead of adding information, you kind of want to just like you have so much information, like I'm just actually going to remove as much information as possible and really get down to the most kind of like highest alpha, just like information and channels. So it's like that's usually where I'm at, is like I'm trying to like remove as much information as possible and only focus on like a very small amount of things. But it's like this actually, like, you know, after not just hearing on Spaces, I was like, and not just hearing on Spaces, but actually like, you know, again, like getting more so into the mindset behind it, like why we think it's maybe that way. I'm like, yeah, like this is more people should add this to kind of like their view, like their analysis for sure.
Yeah, and I don't know that it's like something I'd be looking at like on a 5-minute or anything like that. To me, like the only place I'm really looking at this here is like on a daily or a weekly, higher time frame, because it's really I don't know, it's almost like a risk on, risk off oscillator of sorts. It's not something that like, could you trade this as a pair if it was available? Yeah, absolutely. And I'd probably look at it differently if I had a direct pair that I could trade this way. But if I'm not, then I'm kind of just using it for sentiment. But dude, I mean, if Ostium ever lists this pair, dude, I will definitely be like, okay, how do I now trade this? And that would be a beautiful place, because it's like you're basically just trading on, okay, do I think strength is going towards gold, or is strength going towards BTC at the moment? And that's really the only two variables that you would have.
Yeah, it's a very, very interesting thought. I think we'll look into it more. I know that we've been wanting to do kind of interesting stuff like that, different spreads, different pair trades. So it's like I think that now that I'm more kind of like versed on what it means, I mean, shit, I want to trade it at this point. So it's like we'll get it popping. We'll get it on the platform here sooner than later.
Yeah, let's do it.
Because this is also like another way to think about this. And I had a buddy, we were trying to put together like basically like an LP play around this using PAXG, right? Because there's already a token that follows gold, and that's Paxos Gold, right? PAXG. So this is basically the chart of BTC over PAXG, or PAXG BTC paired is technically what this is, right? Close enough.
Yeah, pretty close. So that's why eventually we want to get on just the actual gold price. The PAXG token that, like, basically a derivative of a derivative. It has liquidity issues sometimes. So it's like, we hopefully we can construct something even better that'll have a little bit more predictable, or like, not predictable, but just a more stable price action. Because one of the things is, you tend to see really big wicks on PAXG still at this point, just because of liquidity. But
liquidity, yep. How real time is like the data on Ostium? This is one thing that I don't know that I've paid a whole lot of attention to, but I know that, like, if you're using TradingView and you're looking at certain like futures or certain instruments, they not all of them are real time. Like, there's some stuff that's delayed on TradingView unless you upgrade and you pay for that real time data. Is Ostium pulling real time data, like equivalent to what I would get like on a Thinkorswim or something like that, from Schwab or somewhere else? Or is it?
We're pulling we're pulling at this point the data. Like, so the way it usually works is, you have the NYSE, you have NASDAQ.
Yep.
There's other parties who parse their data, like, and the biggest, most well-known one, obviously Citadel, they're parsing their own data. They have better data a lot of the time than the actual exchanges. They're like, hey, they can actually go back to the exchange and be like, hey, you actually made a mistake here. So there's a lot of people who are parsing their data. So essentially, the way a lot of the kind of the oracles work is you're working with one of the data providers, or that essentially is like working directly with the or like gets the data from the New York Stock Exchange, gets the data from NASDAQ. So we're basically getting the real time data. In order to have like a stable oracle, you want to aggregate multiple sources of data. So it's like we're going like 4 to 5 different, basically data kind of like parsers, like different people who are looking at this NASDAQ, NYSE, CME data. And then essentially we're blending that into a single price. So it's like it's that's why sometimes you will see like a little bit of difference, say, than what if you were to look on,
Yep.
you know, on the trading view, just because they're getting their data they're doing something similar as well. So, you know, it doesn't always equal the exact same price. Like if you go on trading view, there's multiple feeds for example, like SPX or NDX, things like that. So, and then another thing, just in order to reduce volatility, and like during contract rolls, is we also blend the first 2 months. So the front month and the next month contracts, like the futures contracts, we blend those together into one price. There's no volatility on contract rolls. Like it, in like an Oracle system, like, you know, in a like a DeFi system, other people have done this before, and it led to like the, you know, certain attack vectors with exploits, you know, when you get like weird price jumps, and things like that. So, because, you know, obviously if you're working in that system and you get a price jump in the Oracle, then it's like immediately, if a trader's long or short in the priced Oracle, you get a period in the priced Oracle has an error and it jumps up. Let's say it jumps up above their take profit, you know, and then they could like, you know, make money off that. And then, but in reality, the price, you know, in the underlying market might have never actually reached those prices. So it's like, it's basically to protect both the protocol and users from being both liquidated by a kind of like, you know, kind of like a data outage, essentially, what it would amount to, or, you know, from the protocol or LPs from taking a big loss because of some kind of data outage that led to a price jump that, you know, led to a ton of profits or something like that in the protocol. So it's like, yeah, it's just mostly for just security, like mostly capital security in this case, like making sure both the users and the LPs funds are safe. So.
Got it. Are you guys using Chainlink on the back end as well?
Chainlink for crypto. So we're actually, I think, I don't know if I mentioned when you were saying this, but, you know, we want to be a place where people can just, you know, if you're just a crypto trader, you can just trade crypto too. So we're going to be listing a lot more crypto pairs in August. So within the next couple weeks, we're going to be listing a lot more crypto pairs as well. So yeah, that's something on that end that everybody can look forward to, is you're going to be able to trade. You know, actually, you know, send us some input. You know, if you're watching the stream, and also you, Bits, Cade, what do you guys like to trade? I know LTC.
Give me my Litecoin, man. You got to give me my Litecoin.
I'm putting in a good word.
I would trade Litecoin just to say that I do. I'd be down. I'd be so down. Oh man, what those come to mind? It's.
I mean, you probably, like, I don't know, like this is like this is you know, it's a bigger conversation in that, like, do you need to have, you know, all of these like micro caps, and, you know, do you eventually, you know, does Ostium move in a direction where, you know, is there a way for it to also, you know, quote unquote, like list new tokens and stuff like that? And does that even make sense? Like, or, you know, because when you're dealing with like on-chain trading versus like having these centralized liquidity baskets that basically provide, you know, that buffer for people to trade in and out with a really good spread, but you don't have that sometimes on chain, and then you have the delay in time, which is not a lot. You know, Arbitrum is very fast, but there are those differences. And so I don't know, like at some, you know, in some ways I could make the argument that maybe just keep the majors, and like the majors is enough for what you're trying to do here. I feel like Ostium's attracting a different crowd currently than like people that are just looking to go on, you know, a centralized exchange and do, you know, 100x leverage on some like little shit coin that just launched or something. But who knows? Because I don't see those people necessarily being the same people that are going to go in there and look for like a gold trade or a SPY trade or something like that. I don't know. I could be wrong.
Top 20, you know, so basically, probably top market cap, top volume tokens. You know, obviously, you know, at this point, we'll probably end up listing like things like Hype. You know, Hype at this point has kind of made its way into kind of just like top token. So it's like, we'll probably stick to these like high liquidity, high market cap tokens for the most part. You know, we'll probably move into, you know, a lot, like another thing we'll have coming in the next couple weeks. We're going to list the crypto stocks like Circle, Hood, Coin, Galaxy, maybe, like, you know, so all these like the biggest crypto micro strategy, obviously, you know, the biggest kind of like crypto adjacent, crypto beta stocks will definitely list. And then I think we're also going to
make sure you guys get AMD, man. You got to get AMD on there.
AMD, yeah, along with like semis, we need semis. I think another thing, like, you know, kind of drop in some alpha here is like we might go into like sectoral ETFs. You know, if you want to bet on semis, if you want to bet on staples, if you want to bet on discretionary or you know, energy, and you know, basically if you want to bet on any kind of like sector of the market, we might go listing like sectors as well, tradable sectors, you know, indices. Yeah, I mean, again, it's like you said, you know, the type of trader we're attracting, we want to trade like people who are more interested in kind of like macro moves, larger assets, and as opposed to micro caps. So I think like, yeah, we're still exploring what the best kind of asset mix is in that direction in order to kind of capture the market fully, for sure. I want softs. I want soft commodities too, man. I want soybeans. I want coffee.
Ooh, yeah, coffee.
Yeah, all that,
Yeah.
man. Orange juice. You know what I mean? We need all that, dude.
Canadian MJ, you know.
I mean, I think that will be a very, very, very possible future to be able to trade those things. I mean, I think it was one of you guys on the space earlier talking about that. Like the future is like, oh, it was you, Bits, because we're talking about AI, and you were like, yeah, dude, the future is going to have to move that direction. Like the bots are going to take over. They're going to be automated. Can't out trade them.
We're gonna be trading NFTs is what we're gonna do, man. We're just gonna all be trading NFTs.
Yo, actually, that's like, all right. Somebody's probably already cooked that. You know, we are in crypto. Like, there's probably already been like NFTs where it's like you buy the corn and you plant it, you stake it, and that's planting the corn, and you wait for it to grow. You know, like that. Somebody has totally cooked that up.
Oh, 100%, 100%. I would even say like if you're in the States, there's a project, and I know one of the founders, but you can go look up the utility company, and I think it's at the Utility Co. I think, but they're doing like tokenization of industrial type use cases. So they're actually they're partnered with a oh shoot, the word's just escaping me. Not the greenhouse, like the like a grower for MJ for cannabis. What would you say?
I mean, it would be like are you talking about just like like you said, greenhouse, but I mean, you mean the actual bigger company, right?
Yeah, they're partnering with the company, but it's why can I not think of the word that is used to describe this legal growing farm operation? What the heck is the name for it? Cade, help me. Not the dispensary, but like the growing side. I don't know.
Just the
farm. The farm. They're partnering with these farms, these co-ops, yeah. But what they're doing is they're setting up automation where you can go in there and you can buy NFTs or tokens or whatever that represents a certain amount of like crop, right? And you could do this with anything. And then they've got automation in the sense of like that there's automated watering, automated lights, they got the cameras that's watching the growth, all this type of stuff. And essentially it's just like a tokenized version of you partnering in like a co-op of sorts, right? Like you're going in there and you're going to earn through the sales, you'll earn some profits, profit share through that. So yeah, they're doing a bunch of cool stuff, but yeah, dude, I mean, there's been attempts to do that type of stuff in the past, and a lot of it's been scammy, but these guys are doing it legit, in the States, with people that understand, industrial automation and stuff. So who knows? I mean, if that side ever takes off, I think that'll be interesting.
Yeah. I mean, I had a conversation about this earlier, like, you know, that your kind of statement, if this ever takes off, I feel like, personally, I'm still in a level where it's like we're seeing, you know, asset appreciation. It's really mostly concentrated into like a few different stocks, a few different assets, Bitcoin included in there. I personally think that, you know, everybody thinks that this is the end, this is the last cycle. I actually kind of agree with the maxis a little bit here, where I think that more than likely, you know, we see you know, maybe a little downturn here in the next couple of years as you know, in order to get rates lower, you know, you end up seeing rates move down towards like 2%, or basically like just a much lower level over the next few years. And I personally think the next speculative cycle, like the 2021, maybe we don't break those 2021 highs on the gold BTC chart until rates are at zero. You know what I mean? Like, so it's like or for me, I think the biggest speculative push, like one that beats 2021, even more ridiculousness, comes among this type of scenario, like this type of conditions, like with so much money still in the system. But then again, on top of it, we're going to be with zero rates, just with massive, just credit expansion, credit cycle expansion. So I'm actually, people think of me as a bear, but I was like, oh, actually over the next, I think I mentioned this in the last spaces, over the next like 5 years, like into, even if there is a little downturn in the next couple of years, I think that we're going so much higher. I think that they're going to run things hot. We're going into super cycle. Like, actually, I've never said that before in my life. I actually think I've never said we're going to go into a super cycle in my life.
It just flowed out of your mouth so comfortably, Flo. I don't know if I believe you.
No,
I think when you're not on spaces, this is how you talk when you're not on spaces.
Never said but I really think that like these conditions, we're going to be in a Trump presidency still. Like, they get rates down towards 2%. We get credit expansion. We get like basically the Trump presidency conditions with 0% rates again. Like, dude, they're going to blow off the top like we've never seen before, like in our lives. You know what I mean? So it's like, that is actually what I kind of think. I think the maxis are right in a sense. We're going to go into like just complete blow off top. Like once rates are headed back towards zero, and just like next cycle is the one. Many people thought this was the one. No. This next one is the one.
This next one, this one better not be it, because I don't have enough time to stack the Bitcoin I need if it's going to be this cycle. I'm like, brother, you better hold it for a couple of years. Like, I need time.
I'm like, obviously it's path dependent. Everything in this world is path dependent. You know what I'm saying? Like, I can be really confident about something now, and then something happens tomorrow that I'm just like, oh wait, well now my predictions for 6 months from now or a year from now or 10 years from now are different too. That happens. That's tariffs true. Were like that for a lot of people. Their expectations for the next, decade, especially businesses, were changed, right? It's like, so things can happen that change your outlook like for decades into the future. But right now, I'm seeing like this cycle is being, very much asset driven. The real economy is kind of like, to be honest with you, under the surface is not that great. Credit is really not super great. We're seeing a lot of like investment, like foreign investment, other things, but that money isn't really getting spent yet. So it's just like, I really think that like the next cycle, like once we're at lower rates, like, but we're still there's just still tons of money out there that's been printed. Maybe
and the auto market is in a way reflective of this flow. I don't know if you follow it, but there's a couple channels that I watch on YouTube that I don't even know how I found it, but they were just, it's a couple guys, and they basically just they give weekly updates on the used car market and also the new car market. And dude, they're walking around some of these big dealerships, and they still have 2024 models, that are unsold, brand new trucks that have been sitting for over a year, unable to sell them. And this is the case that market is in right now. And used car market is interesting because that one, you're seeing a lot of vehicles right now are actually selling at above market value. Like if you're using the book values. And I think that's a direct result of, new cars are too expensive. Rates aren't great. People aren't wanting to get into these big payments. So they're shopping for used vehicles. So it's like right now, if you have a used vehicle, you're kind of sitting on an appreciating asset in a way that's maybe coming back up to break even for you or something like that, And I think that's a very strong indicator for the health of the economy, because what's one of the first thing people do when they get tax returns or they get money or they get bonuses? They go and they want to upgrade their cars. They want, I want to get a newer vehicle. I want to,
Dude, I haven't gotten a tax return in so long.
Well, dude, but like the what's interesting is, this represents 99% of the country, right? If you're talking about America, is most of the country is getting a refund, and they're going to go and they're going to spend it on these consumer goods. And when that starts slowing down, like you can look at business people and say, well, this is how it's affecting business people and businesses and entrepreneurs, but that doesn't represent, the majority. And yeah, I don't know, so I say that, Flo, to kind of back your point that I don't know that the economy, because there's a lot of studies that are still coming out that, consumers are doing fine. They're still spending money. They still have savings.
But they're spending on staples. Like they're spending on things. They're spending on food, and they're spending on housing, and they're spending on, so it's like consumer spending is up, but but it's because they're spending on things that used to be a lot cheaper. So it's realistically, this is contrarian to a lot of people, just like in the mainstream, traditional finance are saying, but it's like, I think the economy is really weak. It's really asset driven. I personally think that like the type of economy we're in right now, like they've talked about since COVID, is very K-shaped. There's some people at the very top doing extremely well. Maybe the top 20% is doing extremely well with like stocks going up, crypto going up, and just the rest of their assets. But middle class and lower housing has not been performing the greatest in these conditions. People who are dependent on wages instead of asset appreciation and investments, they're doing horribly. They're spending their entire paychecks on just surviving essentially. So it's like the actual economy under the surface is not great. Assets are just doing really well because, again, this is more of a contrarian take. I think that in these conditions, again, like that higher rates are actually stimulative to assets, in my opinion. Right now, what it is essentially 50% of the deficit. So the U.S. deficit, what the U.S. pays, just in general for all of its outlays, like it is 50% interest payments, right? So that's essentially 50% of the entire U.S. spending right now is outlay from public money into private hands. So what is the private, what do they do with that? Well, they're reinvesting it into shorter term bills, which basically, as opposed to longer term bonds, and because of the bill issuance mix has been changed over the last few years. So it's essentially just a lot more leverage is being unlocked into the system. A lot more capital is being caused to flow into risk assets. But essentially, I think that in the short term, when we finally do lower rates, until the credit cycle can re-kick in, until people start taking out loans, until people start spending again, I think in the short term that lower rates are actually going to be depressive.
It's going to hurt
asset prices. Yeah, personally,
I agree.
I really think so.
Well, and I think the prior times that they've cut rates, like, I mean, the most recent one would be during the COVID time, but you can go back and you can look at other times, and it's the initial reaction isn't always positive initially. So it does take a little bit of time, as you said, for that spending behavior to kind of shift and pivot a little bit. So
exactly. So it's like, yeah, we're in a really just K-shaped economy. The consumer is just spending on mostly staples. Like they're not doing that well, but assets are doing good. The top 20% is doing good. The top 20% is spending. So it really just depends on where you sit on like the income asset bracket, what your opinion of like the state of the economy is right now. More than likely, in finance, in like when we're on Twitter, we're on Spaces. I mean, primarily just, we're all doing relatively well. For the most part, that's why we, have made it into that kind of space. So it's like we for the most part have like a, just tend to have a more skewed kind of view on things. Like if, especially, all respect, but when you go into like the financial spaces, right? You have a lot of people who are looking at just like very much so the top end of the economy, the top bracket. So it's like their reality is a lot different than the person on the street, just the normal consumer, the normal family. A lot of the time. So it's like, yeah, data looks good. It all looks good. What do you mean the economy's humming along? It's like, we're booming, but it's like in reality, if you go,
I saw someone call out Grant or Gary Cardone. I can't remember which one it was.
Really?
But because one of them was like posting about like, dude, like the easiest thing you could do right now is you just need to be buying Bitcoin and you need to be like putting it in there. And there was a comment on there that was just like, dude, you're like failing to realize that most people don't have any money to put into Bitcoin right now. Like, what are you talking about? Like, no one's going to change their life putting in $100 or like, it's not going to happen, dude. So their reality is just totally different. And they're missing that part, right? Like you're saying, okay, dude, I'm up, 100% because I got in at, whatever I got in at, and I'm up 100%, dude. It's like, I killed it. Yeah. But like what the average person, they put in maybe what, $500, $1,000. Like it's probably somewhere in there. Like for the average person that's going to download like a Coinbase app and buy their first crypto, right? Like that's probably where most of that purchasing is happening. It's not a lot. Like, oh, big deal. You turn 500 into 1,000 or 1,000. Like it's not life changing, man. They're gonna sell it too.
Drug dealer, unfortunately, too. Coinbase and Robinhood and all these, they're the drug dealer. They're bringing you in a premium product to eventually sell you the cheap stuff. So it's like Bitcoin, Ethereum, Sol is listed right there next to shitcoin. So it's like, unfortunately, but a lot of people who they go there to invest in Bitcoin and Ethereum and Solana, whatever it might be, they get drawn in by the marketing and they get drawn in by everything else. They end up losing that money.
Yep.
on other tokens. So it's yeah, it's a very
and this is why that cycle is going to continue, right? It's a perpetual cycle of people will keep trying to outperform BTC in some of these riskier plays, because honestly, like, okay, to double your money in BTC right now, I mean, it takes a lot at these values now. It's going to take a lot, and the time horizon for that's probably going to be a little bit different as well. So yeah, it's unfortunate. I think that the period of people making like life-changing money with Bitcoin is unfortunately probably mostly behind us. I think it's an instrument for saving at this point. I think you should be saving in that, right, and outperforming, just like with gold or silver, right? Like you got to think of it as like it's a longer term hedge. You're saving, but you more than ever, I think the case for learning to trade or learning new skills that can flow cash that you can then use to reinvest is probably where it's at right now. Like, people have to be hyper focused in how can I make more money in the next, like if this next cycle is the one, right? And Cade wants to have a lot more BTC and Litecoin because he doesn't have enough, and there's only 21 million and there's only 84 million, and he's got to get as much of both as he can. Like, Cade needs to be thinking of like, where can I go out and just make a ton of money in these next couple years, and then just constantly be just topping that off and just saving and topping it off and investing. But you shouldn't be trying to you're not going to grow your bankroll by doing that. That's where you're going to save for long-term wealth. You need something that makes you capital, something that makes you cash and profit now, so that the saving in the BTC and the precious metals can make you the wealth over the next 10, 20 years.
And a lot of people forget that part in crypto. A lot of people forget that part, that you always want to have income streams. You know, that's like the classic crypto mistake.
Income streams.
Cycle where it's just I'm rich in assets now. I'm rich in assets now. I'm just going to live off the asset appreciation. I can just sell some as it goes up. That's like the ultimate trap at that point. You know, you never give up your income streams. You know what I mean? You always want to have money coming into your store of value, whether it's Bitcoin, whether it's gold, whatever you choose it to be. I see a lot of people making that mistake in crypto, particularly at the top, towards the end of the cycle, where it's like, no, I'm asset rich now, so I don't need income. It's like, you should probably keep income for as long as possible.
Yep. This is why I think a lot of people are traders, and not just full-blown investors. Is the trading creates the income that you can use for the investing, right?
Yeah, for some reason that point gets lost on a lot of people. And I'm like, guys, this replaces the 8 hours at the job. This is not
exactly.
Like,
that's how you have to think of it.
What is a job. What are you missing here? I'm like, why are you so mad? I'm like, I don't understand. I'm like, this is their job. This is their day job.
Yeah. Well, the disconnect there is that they're still probably employed, or they still have income streams, and therefore they don't get that. But it's like, if you don't have an income stream, what is your suggestion to someone that doesn't have an income stream? Go get an income stream. And then it's okay, I'm going to go trade. No, you shouldn't be trading. You should only be investing. What? It's like, I just told you. Now, granted, I wouldn't recommend someone try and turn trading into an income stream if you're not proficient at it, because you're going to end up needing another income stream to feed that income stream.
This is contrarian. This is not what anybody wants to hear, but you should already be somewhat asset comfortable. I won't say rich. You should already be somewhat asset comfortable before you start trying to like turn it into a new income stream. I know it's not what anybody wants to hear, especially when they're just starting, but it's very like, if your rent is dependent on trading performance, your emotions are just going to get way too involved in that. Correct. If your rent's paid and you don't have to have any emotions on that, and other things are taken care of, then you can trade with no bias, no emotion, because it's not like, if I lose now, I'm fucked. That's like the biggest thing that screws a lot of people up, is like, they have a bankroll and they don't want to take a little loss, because they like, say I have $1,000, my rent's, $1,000 or whatever. I'm like, no, I'm going to trade, I'm a DJ and I'm going to try to trade that into a higher amount. I'm afraid to take a $200 loss because I won't be able to pay my rent. And then that's what leads me to losing the entire 1,000. You know what I mean?
Exactly.
So it's just like, it's not what people want to hear, but you have to be somewhat comfortable before you can really make trading your job, because you don't want to bring any of your emotions and your it can't break
It's
you.
like it's got to be one of the two. Like you got to either be so desperate that this is going to be what gets you out of the hole and you make it happen, which I've seen before, or you're like, dude, I've got a good sized bag. I'd like to learn this and not have money that I make in this little experimental phase.
It's dependent on your situation. Yeah, it's dependent on your situation. Are you single? Are you young? Are you married with kids? Like all of that's going to factor in. But yeah, dude, I'm glad that I started and I got totally wrecked when I started, but I'm glad that I started while I was still working. I was in a corporate job, still working a ton of hours. But I had a very nice salary that was coming in that allowed me to, even if I lost everything that I was putting into trading, I still had a paycheck coming in and I didn't have to worry about it. Right. It was like you were set. So, and and I didn't even start considering doing anything like this full time before I was in a comfy place. So, yeah.
Yeah, totally. 100%. Well, I know you have to bounce here in a second. But didn't know if you wanted to leave us with any final thoughts from the flow of consciousness that you always bless us with?
I mean, honestly, we talked about a lot of great stuff today. Like I said, I actually learned something new, like adding something new to my analysis too, with the kind of like BTC gold indicator. So it's like, no, it's been a great stream. I really appreciate you hosting as usual. Thanks for joining us and, kind of like showing us all your charts and your analysis as well. Bits, really appreciate you as well. Really,
my pleasure, man.
On space with you and stuff. And I mean, love to do this with one of these you guys again. Even maybe something broader too. I like the spaces. I like the panels. Maybe we should do like video, kind of stream panels.
Ooh, that would be cool. Yeah, that'd be cool.
Could be cool.
But yeah,
that's all. It's a little weird with the video streams, but we'll see.
Yeah, that's all I'll leave you guys with. Just appreciate being here. Obviously, if you're watching, you should try out Ostium. Best place to trade any type of asset, whether it's crypto, whether FX, commodities, indices, etc. And with more crypto, tokens and stocks, and kind of just everything else in the sun coming within the next couple of weeks. August is already, but it's going to be even more of a huge month for us within the next few weeks. So yeah, stay tuned. Nice. Follow along at Ostium Labs, and look forward to doing another one of these pretty soon.
Absolutely. And for you guys, if you do want to try it out and check out the platform, highly recommend it. Definitely just go down the comment below the stream. You can find it whether you're watching on YouTube or X. You can find it just down below. And so definitely recommend you do that and use WolfC as well. WolfC code WolfC to get started. And guys, we'll catch you in the next one. We do spaces and streams every single day. Here at Wolf. A lot of fun. Bits. Yeah, man. Appreciate you as always, dude. Dropping the alpha.
Oh, thanks for the invite, man. Yeah.
Yeah, man, 100%. Anytime. And Flo, as always, appreciate you coming on as well. Shout out to you guys over at Ostium. You guys doing some great stuff. So appreciate you, and it's been fun building the last, I don't know, many months, like 7, 8 months or something like that, right? It's been a while. Yeah. Feels like. So, yeah, beginning of the year. I mean, beginning of the year was a different lifetime, dude. I first moved to Puerto Rico. It's an entirely different lifetime, it feels like. So I feel like we've grown together in these spaces. But anyways.
More growth to come.
Yeah, let's get it. All right, guys, we'll catch you guys on the next one. Take care. Time for Ostium.